afternoon, traders. Hope everyone is well. Welcome back to Five's Trading Channel, and we are back again with another weekly flows video analysis. Today we're going to be looking at the market, seeing what happened during the previous week and how we can potentially capitalize on the week moving forward. Starting with gold, we are on the monthly time frame. And what we can observe here is that the current monthly time frame for May is currently closing bearish with a bearish bodied candle. We see a bit of a bearish pin bar at play. The previous month closed with multiple wick rejections, both on the top side and the bottom side, with the bullish bodied candle. And it appears that we are now in a retracement phase for this month. Looking at the indicators, we can see that price is comfortably trading far beyond the 50 RSI, the 50 SMA, and we are in the overextended region, bullish overextended region of the RSI. We have hit that 85 point level on the RSI, which confirms the massive overextended nature of this market and the need for a correction sometime soon. As mentioned in previous videos, the markets are currently running on fundamental sentiment at the moment based upon the news coming out of the US, based on tariffs, changes in policies, etc., etc. And of course, due to the greenback being the global currency, this in turn impacts multiple assets, including gold, seeing as it is a safe haven currency. So the bullish nature of gold is just due to the fact that people are gravitating towards due to its safe haven nature. I do expect some type of drop in this market sometime soon, but I'm not betting on the drop happening until I see a clear signal coming out of the lower time frames. So with that, let's hop into the lower time frames and see what's happening. Looking at the weekly weekly time frame, we can see that the candlestick patterns are currently in a bit of a consolidative factor with some bearish undertones. How are we observing this? Well, we see wick rejections to the upside and then consolidating nature on the full-bodied candles right here. We can see that this week opened with a massive bearish push to the downside. We're currently 3% down in the early hours of the morning, and I believe that this is going to continue in terms of retracement period unless the support level here holds at 3200. Now, we can also observe that the weekly time frame is also overextended. Where we can see that is price is trading far above the 50 SMA right here, and we were in the overextended territory of the RSI, but it appears that due to this retracement we are back within the bullish zone, but we still have room to move to the downside towards the sweet spot between 45 and 55 on the RSI. Thus, this leads me to conclude that the retracement is not yet complete, and once we see price sitting within the zone, within the sweet spot, I can then conclude that the retracement is complete and we can start looking for potential moves to the upside. Coming into the daily, we can see the formation of a double top pattern right here at 3437 or 3440. Markets have been moving steadily to the downside, but finding support at 3200. If we take a look at the indicators, we can see that the price is very close to the 50 SMA and is within the sweet spot region of the RSI. Thus, price may have the opportunity at the support level of 3200 to actually turn around and keep making moves to the upside. So it's very much a battle between the weekly time frame and the daily time frame as to which one is going to actually show the indication for completing the retracement. Now, if we take a look at the weekly, we can see that the last time it was actually within that 45-55 region was November 24, perhaps end of December 24. And markets have yet to reach that levels again. But on the weekly time frame, we can see that we had the sweet spot tapped on the 8th of April, we had it on the 10th of March, 28th of Feb, and also within December and January. So right now we are sitting within that zone. If I get an indication from here that price can continue to the upside, I think that this holds more validity that we can see potential moves to the upside. So I would be more comfortable taking it here from the daily. However, when we observe the monthly and the weekly timeframes, we can see the overextended nature of this market. And I think it's caused the concern that we do not want to be caught on the wrong side of it. So even if you are trading to the upside based on the daily, which is perfectly fine, I would say that these should be more intraday trades where you take the opportunity from the level, but take your profits once it hits a level of resistance, such as 3433, as per this example here. So if price hits a support and provides me with a bullish signal on a lower time frame, say the 4 hour, the 1 hour, I'll be more than comfortable taking a long position towards the resistance of 3430. Just observing the futures for gold as well, we can see the price difference right now is only 4 points. It is 3226 in the futures, while it's 3223 on the current pricing of gold. So it's clear that futures is higher, which may indicate that price may go up. But at the same time, futures gold is also making a retracement to the downside. Moving on to NAS 100, we're looking at the monthly time frame. So we can see that on the monthly time frame, especially for April, we had a massive move to the downside, followed by a massive correction, which created a very much a strong bullish pin bar with a massive wick rejection, almost testing that 50 SMA. For this current month of May, we have a full-bodied bullish candle, which indicates that the bulls are still in control and we are moving to the upside. We have continued our move to the upside. So with the bullish trend still intact on the monthly time frame, we can also observe the bullish structure such as higher lows and respective higher highs, price trading comfortably above the 50 SMA, and we are very much in the bullish territory, not even in the overextended, just the bullish territory of the RSI, which leads me to indicate that there's further upside potential. Upon the weekly time frame, we can see that price had fallen far below the 50 SMA and had found support at 17,300. Once finding support there, the markets have massively spiked back above the 50 SMA, and we have removed ourselves from the bearish territory, and we're currently in that sweet spot region. May indicate some consolidative nature for the weekly, but for the most part, we are making steady moves to the upside, so we can see the bullish nature is continuing from this point of support at 17,300 on the weekly time frame. I think the daily has more structure for NAS 100 due to the massive volatility of its movements, and we can observe higher lows right here, followed by respective higher highs. We can see that the markets did open with a gap up this Monday morning, and we have settled above the 20,360 level, which was the last previous lower high in the bullish trend. So it is clear that the bulls have, the bearish trend, and it is clear that the bulls have taken control from this point onwards. We can also see that price on the daily time frame has comfortably sprung above the 50 SMA, and we are in the bullish territory of the RSI. So we have structural bullish nature, price trading above 50 SMA, and bullish RSI. So we have three bullish confluences, which confirms the bullish nature of this market. Into the 4-hour time frame, we can see that the bulls had taken control fairly earlier, and we can see we've had multiple opportunities to get in some long positions here. We had one here the 30th of April, the 6th of May, we had one around the 7th of May, and of course we've had one recently, but we opened with the gap up on this Monday. So there was no way to really tell that this market was going to gap up until it did, but we will catch the break and retest level and trade this to the upside. I'm more confident in taking long positions now because we have broken this level. We've seen how the market has reacted to 20,300, And the break above just confirms that the bulls are in firm control. It is showing momentum to the upside. Market directionality is confirmed to the upside. And I'm more comfortable to take a long position once the retracement takes place on a lower time frame like the daily or the 15 minutes. Coming into US 30 on the monthly time frame, we can observe the bullish nature of this market as well, where price in April had a massive move to the downside, tested the 50 SMA before having a push to the upside and the bullish nature resuming. Now we can also observe on the monthly time frame that we tapped the sweet spot region of the RSI and not only the 50 SMA. So this is a double whammy confirmation, and also to mention the fact that we have a bullish full body candle for the month of May currently. So it's my indication that the bulls are in control, the bullish nature is continuing. Another weekly time frame, we can observe something similar to NAS 100, where the markets sharply dropped below the 50 SMA and found its support around 38,000, which was a previous support level. After hitting 38,000 and sitting in the bearish region, markets sprung sharply, and we are now back within the sweet spot region, and we are just about breaking above the 50 SMA. Coming into the daily time frame, we can see we are above the 50 SMA, and we are still waiting for that curvature of the 50 SMA to confirm the bullish trend. However, we can see the bullish structure at play here with higher lows followed by respective higher highs and price comfortably trading above previous levels. We can see that the last previous lower high structural setting for the bearish trend is still intact, and we are still waiting to break above that. The RSI does indicate the bulls are in control, sitting above 55, and we will continue to look for longs in this market. Upon the 4-hour time frame, we can see that this market opened with a massive move to the upside, and we have broken above the previous resistance at 41,766, and I do expect markets to come down, test that level before moving to the upside again. Price has provided multiple opportunities here. If we take a look at the 4-hour time frame, we can see an opportunity on the 6th of May, the 30th of April, even this past Friday. But of course, with the gap up on Monday, it was very difficult to actually get in on this. Markets opened with a huge move to the upside. And while we could have taken a buy position here, I always like the Monday markets to first play out to confirm market directionality. However, market directionality came early for us this week, and we can confirm the bulls are in control, and I'll be looking for long positions within NAS 100. Let's just quickly run through Euro USD and see what's happening, because there were some massive moves here too. On the monthly time frame, we can see that the bears are in control currently. We had a massive move to the downside based on a retracement play, but it is still overshadowed by the massive strength of the bullish candle in April. We are trading above the 50 SMA at the moment, and we are still in the bullish territory of the RSI. Per the weekly time frame, we can see strong bullish weekly candles at play here. Despite the massive retracement that's currently taking place, we are still comfortably trading above the 50 SMA, and we are approaching the sweet spot region of the RSI, which also indicates the potential end of the retracement and the start of the impulse move, which, looking at how far down this market has gone, if we get a decent long position here and we hold it and ride the trend up, that could provide some massive profits. Per the daily time frame, we can observe that price is very close to the 50 SMA at the moment based on the retracement. We are approaching a break and retest level, which could indicate that enough liquidity has been collected for a continued move to the upside. And we are in the sweet spot region of the RSI, just breaking below it, but still within that sweet spot region of the RSI, which could indicate retracement is ending, and we can start looking for those long opportunities and jump on the bandwagon to the upside. Moving on to Euro Yen, we can see that there's a sustained move to the upside on the daily time frame. We are above the 50 SMA, and we are fast approaching resistance. We are in a broad range consolidation based on the weekly time frame, And due to a broad range consolidation, the indicators are pretty much invalid here. We just move in and out of the sweet spot region of the RSI, and we just trade upon the 50 SMA. So those are no help. But per structural observation, we can see that we are approaching resistance, and we should have a move to the downside soon. USD Yen, we can see that we have a deep bullish retracement currently at play. Oh, wait, let me just actually zoom out here a little bit. Going into the weekly time frame, I'm just waiting for this to load. Okay, so on the weekly time frame, we can see broad range consolidation with support at 141.142 and resistance at 159.2. And we are currently at the support level, and we're seeing a push to the upside. This may be a sustained push to the upside, but what I can also observe on the weekly, I apologize, I think my signal is just slow today. What we can see on the weekly is that price is trading below the 50 SMA. We are in the sweet spot region of the RSI, close to the 50 SMA, and we could see potential further downside movement towards that support level, perhaps even a break of it. But I would want to see how price reacts at this place first. Could see a move to the downside before a push up. Potential formation of a W pattern here before a push to the upside. But I would be just a bit more cautious trading USD Yen because I do believe that yen strength could be kicking in soon. And we will do an update on that per our fundamentals and what's actually coming out of the yen markets there. A quick look at the VIX index. We can see that we are breaking below the 20 barrier. We are currently at 20.2. And a break below the 20 barrier would indicate a risk on nature in this market. And what does that mean? Well, a risk on nature just means that we are... Where is my risk on signals? I apologize. Just give me a second. There we go. I'm just going to visibility on all intervals. Don't know why that disappeared. All intervals. There we go. Starting. Yeah, so a break below 20 we know indicates a risk on sentiment in the market. Risk on means investors are stepping in to invest in indices and taking their money out of gold, which is good for the dollar, not so good for other currencies. So use that as you may. We are stepping out of the neutralized territory right now. We did open with a gap down. So be observant for that with the week ahead. Just see what the markets are doing and trade cautiously. Taking a look at the dollar index, we can see that per the daily, we are still very much in that bearish territory. Just going to delete this. We are very much in that bearish territory still. Bearish structure still very much intact. We are close to the 50 SMA at the moment, which could indicate the end of this bullish retracement for the dollar. So we could see some dollar weakness stepping in should we get a signal on a lower time frame that the bears are going to be coming back into the market. So we have reason to believe bears could be stepping in based upon this break and retest level, based upon how close markets are to the 50 SMA and the bearish trend line we have on the dollar index at the moment. Upon the euro index, we can see that the retracement may be ending. We see the break and retest level here at 112.02. Markets currently sitting upon that level, as well as testing the bullish trend line that's currently at play, bullish support trend line. We are close to 50 SMA, and we are in the sweet spot region of the RSI. So we could see that the euro retracement is ending, and the bulls are favored to come back into the euro. For the yen, we're seeing something similar, with price sitting upon the 50 SMA in the sweet spot region of the RSI, and currently upon this bullish support trend line of the structural highs. So we could see bull stepping back in for yen, bull stepping back in for euro, and bear stepping back in for the dollar. So this week, trade cautiously. I'll provide a fundamental update as the week plays out and see what types of reports we can have. But as a matter of fact, let's just take a look at the reports quickly. Taking a look at the reports for the week, we have USD news tomorrow, Tuesday, the 13th of May. CPI news, very important. That's definitely going to move the markets. We have some USD news on Thursday, PPI, core retail sales, unemployment claims. And then on Friday, we have prelim consumer sentiment. So a lot of red folder news this coming week. So it's very much going to be a fundamental week. And I think it is important that I do provide a fundamental update in line with the weekly analysis that was currently provided. But be sure to check out FX Street, see what's happening within the gold news, see what's happening for Euro USD, compare the news headlines, and see how it could potentially impact your technical trading as well as your strategy. And just make sure that both are aligned. That's the secret. If the fundamentals are not aligned with your technicals, it is safer to stay out, preserve your capital, and then figure out the market directionality and your next move moving forward. However, if your technicals and fundamentals are aligned, that's just a dual confluence for you to actually take the trades with a higher level of confluence and confidence and conviction. And that's what fighters trading is all about. Confidence and conviction. But with that, I hope everybody enjoyed the analysis. Please like and subscribe if you did. And I'll catch you in the next video. Happy trading, everyone. Cheers.